We haven't gotten to Morgan Stanley and Eaton Vance.
No, what was that? Why have we decided to blacklist that?
I don't know.
I mean, isn't he coming on with Wilf later today?
I guess he is. Yeah. We're talking about James Gorman. That man's on a mission. I'll tell you that.
To reinvent the company and not become...
close the E-Trade deal, last week?
He doesn't want to be Citigroup, right? He's opposite of Citigroup.
Yeah. Opposite of Goldman Sachs to a certain extent in some ways, too. Asset management and retail.
Yeah. What do you think?
I don't know. What do you think? You don't ask me what I think.
I think
I'll tell you about the deal.
I think the multiple should be a little bit higher.
I ask you about what you think about the company.
I think Morgan Stanley's worth about $60. They have got great cash flow. They've got great numbers, and yet they get the same multiple as a company that it looks like it's going to be slapped down by the Fed any minute.
Look at that move in Eaton Vance. Again, for everybody out there, it's $28.25 a share in cash, and then it's 0.5833 of Morgan Stanley. There, you can see it right there on your screen. That amounted to about $56.50 at the beginning of trading. Morgan Stanley stock, I think, is, we just saw it, is up, reacting a bit. Actually, I'm not sure I have it open yet. Nope, got it down. So let's call it a $56 deal, but a nice premium for Eaton Vance. Overall, guys, I mean, the potential consolidation in the asset management business, particularly active managers, is just going to continue as they fight off. Well, man, they're fighting. I mean, they're losing this war.
Well, how about like Nelson Peltz with Invesco and Janus?
Right, and that was last week. Nelson Peltz taking his position in significant positions in Invesco and Janus Henderson, trying to get them conceivably to get together. Jim, it does seem as though this is going to be a trend we're going to be seeing. It's already been in place. It's going to continue.
Well, you know, when you do screens, well, a lot of people at home should understand. There's just these constantly. You do a screen every morning. What are the cheapest stocks? What are the cheapest stocks? And this Eaton Vance came up. It was the top 10 cheapest stock for ages. And you kept thinking, when is someone going to do something with Eaton Vance and Invesco? And finally, Mr. Gorman realizes this thing is worth a lot within his company. I think that Nelson is right to push these two, Invesco and Janus, to merge, but I think that they're ripe for the picking. People, they have assets. A lot of them are sticky assets.
What about some of the bigger platforms? And what do you do, even if you're Fidelity, you know, private, enormous, active management, a key part of their business?
What do you do?
Yeah.
They do love being private.
They do.
They're private people.
Yes, they are.
Abigail's a private person.
Yes.
Very thoughtful, not seeking the limelight at all. And maybe that's, you know, it's a family-run business in the way that we used to see.
But there's a sea change going on in this business. I mean, it's not as though this has started today. This has been going on for years. But
well, you saw Lloyd Blankfein on this morning.
I didn't listen. Am I allowed to say that?
Wow.
I keep the sound off.
Didn't listen.
With Lloyd.
Okay.
Yeah. Goes way back.
David, there's a fly on your head.
Got it.
What are we like? Mo, Larry, and Curly. You kind of cut me short there. I mean, Lloyd's a big thinker. The thing that has trapped Goldman, I believe, and has trapped Gorman, they aren't getting any credit for being transactional houses as opposed to houses that have a huge number of bad loans or have problems. Carl, we have to be honest. This Citigroup has become a nightmare of regulation.
Yeah, I was just thinking, Jim, about all the news we're getting from banks ahead of the earnings next week. Obviously, Morgan Stanley, JP Morgan's spending $30 billion today over the next 5 years to address racial inequality. And then this $400 million fine at Citi. JP Morgan goes to neutral, Jim, as they say it's going to take time and money to fix problems and avoid, in their words, becoming a Wells Fargo.
I know. Well, when Mike Corbett announced his retirement, he actually said this. It was in the release. He said it's going to cost a lot of money. He didn't dodge it. He made it very clear that this is going to happen, which made it so I certainly wouldn't necessarily want the new, the successor to have the new job. But Citi they're in a fix. And these regulatory issues, I don't know, you have to throw a lot of money at them. It's not like you just need a better compliance head. Now, Wells, Charlie Scharf, Charlie Scharf laid off some more people yesterday. David, you know that Wells, the stock has stayed right here.
Yes.
Which is rather amazing because the headlines have not been that great.
No, the news has not been particularly good. It has sort of been able to maintain, let's call it the $100 billion market value level. Right. But, of course, when I hear that, I mean, you think this was for a while the largest market cap company, bank.
And it lost the support of Warren Buffett.
It did. He still owns some, doesn't he?
Yeah, well, I shouldn't say. I mean, he owns, but it's no longer the fair-haired bank.
No.
Sorry, it's Bank of America.
No.
Bank of America stock has kind of held up here.
Yeah, it has. Yeah. I mean, but yeah, Mr. Buffett, he's kind of all in with another name. Starts with an A.
Well, it's his biggest position.
Yes, by far.
Likes good balance sheet.
Crazily
big moat.
Enormous.
Kids like it at Dairy Queen.
And by the way, 57% gain this year hasn't been too bad for Berkshire either.
Well, maybe that's why he's in Snowflake, another value-driven stock. Yeah, 100 times sales.
That's weird.
Frank.
Shepard Smith here. Thanks for watching CNBC on YouTube.